We are back on problem 9.30. We're off to part 2 now, which is the direct labor variances. So for part 2, we want to understand where we went wrong or right with our labor, direct labor that is, and we have a standard. We say that to make 1 unit of fertilizer takes 3/4 of an hour of direct labor, and our standard for paying labor is $18 per hour, so it's $13.50 is our standard per unit for direct labor. So now we need to look at what we actually did. Direct labor, 40,100 hours at $17.95 per hour. So we can compare what we did actually to our standard and come up with our variances. Alright, so to compute the labor rate variance, in other words, how did we do in terms of what we paid people, right, and what part was related to how efficiently we used the labor. Did they work fast? Did they work slow? And so therefore we needed more or less hours. We need to separate that out. So labor rate variance is the actual rate minus the standard rate, and you multiply them both times the hours. That will strip the hours part out and you can look at just the rate. So that ends up being $17.95 minus 18 times actual hours, which were 40,100. All right, $17.95. So $17.95 minus $18 is a nickel times 40,100. And that means we spent $2,005, and that's a favorable variance. We spent less than the standard. Alright, so favorable means it's income increasing and having a lower expense is favorable. Alright, the next variance we're going to look at is the efficiency variance. So how efficient was our labor doing the work? So that's actual hours minus standard hours times the standard rate. Alright, so actual hours we know were 40,100 because we have our timesheets to tell us that. What was standard hours? Well, standard hours we have to calculate. So that's 0.75, right, because that's the standard. And we made 53,000 units. So if we knew we were going to make 53,000 units, at the standard we would have said that we were going to make 39,750. So 40,100 minus 39,750 times our standard labor rate, right, equals 6,300 unfavorable. So we spent more. In other words, we were less efficient. We didn't necessarily. Part of what we spent was because we weren't as efficient. So 6,300 of our variance is because labor didn't, I guess, work as efficiently as the standard thinks they should. It took, in other words, it took more than 3/4 of an hour. It took like 0.8 of an hour on average, something like that. All right, so that's great. Next we'll go on and do our fixed overhead analysis. Next video.